Karthik, hi, good to have you with us. How have you been?
Very well, thanks, Ashu. Super excited to be talking to you.
Karthik, it's a pleasure to have you with us, right? Insurance is something when I started my career, right? Which was in banking. Insurance used to be a very significant play, right? When you talk about private banking, when you talk about risk management, portfolio management, all of that, right? And it used to also be a product which used to generate by far the highest revenue, right? And of course, from that to how insurance is, evolved, where the seriousness around it is become just so much more pertinent, right? And especially what we experienced in 2020 has been a revelation, right? Possibly insurance industry never saw a phase like this where people were inquisitive to know or what kind of risks did they run, right? And what are the products that could possibly cover them, right? And it's not limited to just that, right? It's not just limited to life anymore, right? General insurance, for example, has grown leaps and bounds, right? And how? But as a market, we still continue to be underpenetrated. We're possibly the globally largest opportunity in the insurance market space, right? Which makes it interesting and exciting at many levels, right? And possibly through the course of this conversation, while of course we'll talk of your journey, we'll talk of what Symbo is aiming to achieve, but we'll also talk of some of the dynamics that are there when you are scaling a business in a market like India, right? Which is a very, very complex geography, right? By the end of it, our sense is that this conversation is going to stand relevant for a lot of young entrepreneurs and people within industry who are contemplating serving for a complex audience base, right? With that, Karthik, my first question to you, I'd love you to run us through your background, and then we dive into, the large shift that you're now running and the future plans of Symbo. So I'd love to start with your background. You've been in the startup ecosystem. You've done some good work. I'd love to hear from you on that one, and we take a conversation from there forward.
Super. Thanks, Ashu. Really excited to be talking to you. Let me quickly give you a quick background. So yeah, I now have about 15 years of experience, and most of it has been with startups, and
Right.
especially the early stage startups. Started my career with a company called Comely Media.
Right.
I was the first employee. It grew on to become 300 plus employees by the time I moved on. So did a
Wow.
lot of roles there. Yeah, and then I also did my own startup called Fropcon, which was into video services,
Interesting.
and we used to provide content for people when they are traveling. So did
Right.
my startup, raised money. So I've kind of seen the growth, the downs, and all of that. And
Right.
until recently, I was working with a company called Haptic.
Right.
I was the chief business officer, heading revenue for Haptic across the markets.
Interesting.
Uh,
Interesting.
Just on a
That's
side note, apart from my professional career, I'm also an improv artist. So I do regularly perform improv comedy at multiple venues across the city.
wow. Now that we know this, we'll possibly have you do some of it for us at a later occasion, right? But and I think that creativity is very important. It just keeps you sane, right? In a high pressure environment like the one we are in when you're building a startup, right? I think the chase is very different. It's exhausting at many levels, and I think this is something that keeps sanity on. Karthik, right? Talking about Symbo, Symbo started. It's a 3.5 year old venture, right? It started with a very different objective. There were many businesses that you're doing, right? Today, with you on board in charge, you're kind of narrowing down the focus, right? And more focus towards embedded insurance, right? You want to champion the cause. Tell us a little more about how that evolution and that changes sort of happened, right? And what is it that we are chasing and looking to achieve and what's the new game plan? I'd love to understand that.
Sure. So, like you rightly mentioned, Symbo did start about 3.5 years back, and at that point in
Right.
time, the vision was very grand, right? It was like,
Right.
hey, insurance is a large market, and there's a lot of components and pieces to it, and
Right.
Symbo went on with the mission of really trying to solve for multiple aspects of this grand plan.
Sure.
But then, like every startup, you really need to focus and really need to figure out where your strengths are. I think that's the realization we've had over the last few months.
Interesting.
Never have I been so saying the less is more, as they popularly say. Never have I really felt it in the last few months as I've been more actively involved in startups. So yeah,
Right.
we started off doing multiple things, right, from a reinsurance business to a very large distribution business to even providing
Right.
technology platform to insurers. And with time, we figured that, hey, amongst the multiple things that we are doing, we are seeing a couple of areas where the growth for Symbo has been extremely fast and high.
Sure.
And the market opportunity is extremely huge, right?
Right.
And which is why we as a company kind of came together and said, hey, let's double down on what's really working for us and where there's a large headway to grow.
Right.
And the embedded insurance distribution play is where we think we have a strong moat, and obviously we can bring a lot of differentiated offerings to the market.
Very
So which
interesting.
is why I kind of came in on board about a few months back to really say, hey,
Right.
how do we steer this or navigate this this situation that we have and really double
Right.
down and grow the embedded part of the business.
Well, of course, I'm going to ask you more serious questions, right, Karthik? But a fun question. How difficult is it? I mean, for a business which is raised a couple of rounds of funding and sizable funding, right? I mean, we're going to talk about this in the course of our conversation, right? You coming on board and kind of reprioritizing and bringing that energy, right? How difficult is that? Because there is a team which has been calibrated to perform, say, ABCD tasks, like the ones you kind of alluded to, right? There is a certain visibility and attraction that you've already built. With new blood, right? How difficult does it becomes to communicate internally, right? To prioritize. I find it to be extremely difficult, right? So when there are too many stakeholders, and in your case, the stakeholders are not just people, who are leading the business, who could possibly be a little more reasonable. There are also a lot of investors, right? Who invested in the original business model, and from that to the kind of shift, right? We'd love to understand how the internal mechanics have really played out for you. How have you possibly been with your team, been able to communicate for that's
Yeah.
a much lighter word, and I'm sure the exercise was a lot more intense, right? But we'd have to understand what went in.
Sure. So I think I will break this down into two parts, right? One is the intangible part of it, where how do you really figure out and how do you navigate a situation like this, right?
Right.
Thankfully, I think overall the entire startup ecosystem does now subscribe to the philosophy of doing less, right? So half the battle, I mean, as they say, the biggest walls are the ones which are made of flesh, right? The most toughest ones to take. But but thankfully, with the kind of funding and the kind of success stories that we've all seen, where companies have gone to become big, especially when they focus. So that narrative of why focus is important is no longer needs to be justified. Right. So that's one part of it, which thankfully, I mean, it's just the ecosystem is matured, and even the folks at Symbo, the existing team, the investors were all pretty much open to that idea.
Right.
Then comes the second part of, all right, if we have to agree on we need to focus, how do we arrive at the right solution?
Right.
And that is where really the exercise really needs to happen, or the effort really needs to happen in terms of, hey, these are things going on well for us. These are things we think are going well for us, but maybe not. You do kind of a very objective exercise around it. And it's not about prioritizing and allocating resources to the right weightage, as I would say, to really come up with a very obvious answer. And once you start doing that in a very objective, mathematical way, it's the numbers which start do the talking and not the people. And that's where it becomes a lot more easy for everyone to align.
I like how easily you kind of dissect it and put it out, right? And I'm sure, the maths is the easier side of it, right? And that usually is the clearer side of it, right? I think emotions is where I think that sort of becomes the baggage in the entire scheme of things. But I like how easily you put it across, right? And I'm sure it's not been all that easy. But moving on, right? Karthik, I would like to understand now, when you were talking about embedded insurance, right? Now, embedded insurance is something which has started to happen in just about like the last couple of years, right? I'm gonna not talk about the 2 years that we've gone through. That is going to be separate. I would love to, talk to you on that separately, right? In terms of the behavioral changes that we've seen and so on and so forth, right? But embedded insurance has been a relatively new trend, right? Where are we headed, right? What are we chasing, right? Because this is the more creative side of insurance. Otherwise, insurance has largely been, very life centric, and within that they've had a bunch of products, right? Be it ULIPs, be it endowments, be it term plans, and you've had the general insurances, which have again been very, very standard, right? Embedded brings in a very different kind of an environment, right? This is not necessarily something that existed. It's been created by startups, identified by startups, created by startups, and there are a couple of people who've been evangelizing this particular thing, right? Would love to understand what's the market landscape that we are kind of talking about. What are the opportunities and the size of it that we're kind of talking about? I know for a fact that all of this is not necessarily visible. You're possibly in that process of understanding it more and more as you go, right? But I'd love to understand whatever pieces of that you figured, right? I'd love to understand the opportunity and the market that is around that.
Sure. So as you rightly put, it's a evolving market. It's an evolving, or rather, all of us in the industry are discovering the potential of what this could be. The most common example, which is very directly measurable, is embedded inside travel. Right, when you're booking a flight or a package, you can start embedding travel insurance. Right, that's how we all first experienced it.
Sure.
It took a while to kind of take off, but now it's pretty much there everywhere.
Right.
And we see anywhere from 10 to 40% of attachment rates in that kind of a scenario.
Right.
So the embedded concept in a category like travel is now proven. Right. And given the entire travel market size, you apply like a 40% conversion to it, and you know what's the opportunity today.
Right.
And obviously, when you have life-altering events like COVID, the market size balloons suddenly.
Right.
Both ways, people don't travel, but they want to have insurance. So, but as you start unlocking each category, based on how relevant product you can create for that category, the market size of that particular category begins to change.
Right.
For example, one of our most successful implementations is with a company called Lenskart, where we're doing spectacle insurance.
Interesting.
Right? It's taken us about 6-7 months to perfect the product and get the entire process in the buying journey right. But now we are very confident as a company that hey, eyewear alone is a great category.
Right. Interesting.
So the way at least we look at embedded is there are 3 parts to get right. One is how easy or intuitive you make the product in the buying journey.
Right.
So at the right price point, with the right coverage, at the right point, like can you get that right? Second is, can you start thinking of innovative products? One is the ease of buying, but second is the relevance and the product coverage that you can offer at that point in time, in conjunction to the risk perception that the user has.
Right.
And if both of these two come together, you basically unlock like a completely new category.
Right.
So long answer, convoluted answer. I don't have numbers today, but yeah.
No, but I think what you kind of raised can possibly help a lot of people who are going to be watching this understand the scale of it, right? I recently changed my spectacles from Lenskart using your insurance, and trust me, I did not know that you were the brand, behind it, right? It just came to me as a service by Lenskart, right? This is a question that I would have possibly, quizzed you on a little later, right? But given that we've discussed all this, right? Karthik, what this does is, right? What embedded does is that you're not at the forefront of the game, right? You're not building a brand here. When you look at some of the largest players in insurance, right? There's a lot of exercise that they do on brand building, right? Because the trust becomes very, very important. Right? There's a certain affiliation that you had. LIC is a huge example. I mean, look at what we're kind of talking about, right? There's a default trust that goes in a brand, and that's the nature of insurance, right? In a game like embedded, you're not front-ending it, right? You're a back-end partner, right? 2 questions. How difficult does it get to operate in an anonymous environment as a business, right? Where only if an event happens, possibly you come into the picture. Even there, the engagement is fringe, right? In this case, my engagement is with Lenskart, right? I don't care who's doing the backend, right? That is a very difficult position to be in, is my sense of it. And I could be wrong, and I'd love to hear from you on that one. And second is when you're operating in a B2B environment, right, where somebody else is spending on getting the customer, his or her intent will always be to maximize their profit, which essentially means that they will squish you out and squeeze you out till the last penny, right? So your upside is very, very limited, possibly defined in terms of how you negotiate your contracts, right? Now, this is a very difficult environment to kind of operate. I'd love to hear from you, right? Because, and these are connected questions. If you really look at it, if you take a step back, you can upprice your participation if you are a significant brand, given that you are not really in that environment, right? You are replaceable, right? That could also bring in a question on the longevity of the business, right? Love to understand you. How do you see that?
Great question. Something we think about. I wake up in the morning thinking about this almost daily in terms of, hey, how do we build our moats? But let me break this down into 2 parts. The first part of the question was building a brand, how important it is. Mm-hmm. So it all boils down to one very core aspect of this industry, right? Insurance typically has always been sold.
Sure.
Embedded is the first time where insurance starts to getting bought, because at the point of purchase, there is a certain risk perception you have. And you're like, hey, maybe I should protect my risk, right? Sure, you do get calls for life insurance. And again, there is a heavy degree of convincing which is required for you to buy a life insurance. But when you're booking a flight ticket, the only convincing required is protect your travel by paying 149 rupees. Sure. So it's I'm buying the insurance kind of product, which is why players like us need not really do a lot of education, the importance of insurance, and really build out the brand, because the opportunity of buying the insurance in the particular moment, That itself
Sure.
is pretty significant. I hope I was able to answer the brand building aspect of it.
You did, yes.
Okay, second. So now comes the second part of, hey, like how does then Symbo stay relevant in such a situation, right?
Sure.
And the closest comparison that at least I draw in my mind is about the payment gateways, right? As when you are swiping your card and you don't know what payment gateway the merchant is using, but if the payment gateway is very well embedded with all the merchants, there is a very significant sizable business being built.
Right.
Right. So the whole way in which we approach is build scale, create ready-level products, have it being present across as many merchants as possible, and really become the insurance gateway to these merchants. Now, in that process, do we become a brand or not? Doesn't matter. As long as we are adding value to the merchant, and as long as we are adding value to the user by creating the right product, there is enough value being created by us as a company.
That's an interesting point, Karthik, right? But I am questioning, I mean, as an organization, right, when you're engaging, when you're providing the service, right, it's a constant quest to increase your relationship size, right? Pie in the wallet and share in the wallet is what we constantly sort of talk about, right? In a B2B environment like this, right? And this kind of, I know there are no clear answers, right? And that's true for you as well. And there's nothing wrong with that, right? As you go along, you kind of seize opportunities, right? And then that helps you build this better. But what I worry of is that this is a replaceable relationship, right? I mean, while of course I buy your argument that there's a payment gateway. I mean, not in love with the payment gateway, right? To me, that's it's just a facilitation play, right? Which has a very defined cost. Unfortunately, the banking industry that they've been, it's becomes bureaucratic. The costs have not really come down, right? I mean, Bharat Pays, for example, challenged MDR, right? And that's kind of now making people to relook at the possibility in the industry, right? I would, what kind of, it's possibly discomforting you as well, right? That ability to price is very, very limited, right? And like I said, unlike payment gateway, where there's a lot of reconciliation, there are like a variety of other things that you can do, right? Could this still be a replaceable relationship or a partnership that you're building? Are there those risks that you run in the process? I'd love to understand that.
Sure. So, I mean, yes, we always do run that risk, right? Because if you don't build a brand on your own, that there is that negative impact of that. So far, we've had zero churn of the multiple partners that we've worked with. And as I dig deeper into why, right, it's really boils down to three things. The first being to make the entire experience awesome for the customer. It's done well if you do a very tight integration with a partner.
Right.
So it's not like, oh, you bought a product, oh, here's an insurance product, go and buy it. No, we are very strongly embedded in the journey, and we focus a lot on doing that right.
Right.
So we don't really have like a cookie cutter approach based on the customer's buying journey at the particular store. We try to become very seamless.
Right.
So once you embed that well in the journey and do those technical integrations, for a partner to kick someone out and get a replacement, the motivation has to be really high.
Right.
That's one part of it. The other part of it, which is extremely important and more important, is buying the policy is just one first step towards us providing the transaction, right?
Right.
We have a 1-year relationship or commitment to that customer because most of our insurance policies last that time. So are we able to provide that experience to the customer once he comes back, especially during claims?
Interesting.
Right. And we really focus on that. In fact, that is a big part of our team. And when the partner sees that we really care for their end customer, right?
Right.
That helps us kind of build that relationship stronger. And that is a very strong moat, right? Because processing claims is not a transaction. It is an experience from right when the customer says, oops, I broke my spectacles. Now what do I do? All the way to getting him the new spectacle. It is done in such a beautiful way, and we optimize that a lot that it just creates a wow experience. And even then, we are very deeply integrated. It's not like you broke a spectacle, you call Symbo, we'll send you money in your bank. No. We integrate with the partner again. We generate a voucher code from the partner. We make sure the end customer goes back to the partner to redeem the code. And that is all deep tech integration happening, completely automated.
My claim was rejected, right? On the spectacles. And I just went back to the store and I gave them right, left, and center. Not that there was like a desirable behavior. It's just that my claim got rejected, right? And it wasn't my fault. When I bought it on an assurance that, listen, irrespective of whatever happens, you break it, we got to take care of it, right? And when it got rejected, I was just, kind of confused, right? And upset, more importantly, right? In terms of why would you do that, right? I mean, you're giving assurance, right? Now, that brings me to another question, right? When you talk of the insurance spectrum, right? Mis-selling or over-communicating or over-committing, right? Now, that is not something that you necessarily control, right? What's happening at a storefront level is not under your control, right? You're essentially you come next in line, right? You're batting one down. The sales has already been done, right? In an environment like that, the expectations from a brand are much higher, right? You're taking the bad stuff, right? That this insurance company rejected my claim, right? That emotion sort of flows in, right? How that's a difficult position to be in, right? You're not being compensated the way you would want to, right? You're taking the bad side of the expectations that the consumers have had from you, right? And that's a complicated position to sort of be in. But what it also does is it puts in a lot of pressure on your, for example, on the numbers that you possibly have for yourself, right? Because a lot of these claims you cannot go on to settle, right? What's the max there? I'd love to understand that.
So what you're saying is obviously a very common behavior or output that we've seen. A part of it is about customer education, right? Even customers are beginning, and very, very infancy right now, but beginning to understand like what's an admissible claim, what's not, right? We've seen customers. I'm not sure we've seen that in the data, right? So it's our job, honestly, as someone who's bringing this new solution to the market, to train the end user and also train our partners to sell this the most appropriate way. But obviously, in spite of all of those checks and balances, there are still cases like these which do come about. That is when we work with the end customer to explain what's right, what's not wrong, and if for whatever reason, if we are convinced that the customer has a genuine reason, we also work with the insurer to get these claims approved. So we, in that sense, technically are a broker, and we not just broker the sales part of it, but we also broker the relationship, right, between these two parties.
But how cumbersome is this? I'd love to understand how cumbersome is this, right? Because these are very small amount or very small value relationships, right? Honestly speaking, when somebody's buying something, right, they're not even thinking about the insurance aspect of it. It just loosely gets mentioned. You say, yeah, let's go ahead, right? Because you're possibly buying it on a credit card or a pay later or whatever, right? A convenient feature. And this is just a very small element in the entire scheme of things, right? You're not even serious about it, right?
Yes.
How cumbersome is this entire process, right? Because, I mean, you're clearly taking the bad side of it, right? And when they're buying it, that's not a very conscious call, right? Because it's not a very large amount of money, right? How cumbersome does the operations become for you, right? And I'd love to understand what kind of an impact. So, of course, I would love to understand your approval rates, right? If you could give me a broader sense in terms of, where you are on that front, right? And how cumbersome does the operations become? Because, like I said, these are very small value transactions, right? The backend that you have to create in terms of call centers and in terms of, say, teams that are going to address it will still be very large, right? Yeah. Would love to understand how are you solving for that particular problem?
Okay, super. So, firstly, is it cumbersome? Yes, especially within the first 3 months that the product with a partner goes live. The first 3 months generally are high intensity and cumbersome because the partner, us and the user, everyone's learning, right? Even the partner, once they start to see, oh, I'm getting these kind of claims, this was not covered, this was covered. So the partner, there's a high degree of handholding required. And yes, it does become cumbersome in the first 3 months. But what we do, again, like I said, the approach to solving this problem is not to sell insurance. It's just to solve it from a technology first way. So what we then started doing is, right from when the policy is being bought, we just start changing our communication, right? Because we were giving some sort of communication which the customers thought was possible. Now we know these are the 5 issues which is not possible. So we just start changing the communication, right from a training point of view, as well as to the policy copy that goes out.
Interesting.
So that's a very base layer of kind of trying to solve that problem. Second, when a customer does come up with a claim, right? We've now move most of our claims to an automated way where we ask them to kind of upload the photo, upload the bill copy, and our OCR tech starts to detect whether this claim is approvable or not. And if the confidence is not very high, we start giving potential reasons of why we cannot approve your claim.
Right.
Hey, maybe we can't see the breakage in your spectacle. Could you please take another photo? Hey, we cannot see the product ID. Could you please? So all of that is being automated, which means the number of calls hitting our call center or cases which we have to manually review starts to get reduced.
Interesting.
Right. So there is a lot of tech being built there, also on the claims side, keeping user experience in mind to automate this.
Interesting.
Results. At this point in time, we are probably at about 87 claim ratio. 87% of our claims get approved. It's only the 13% is where these kind of challenges happen. And even the ones which get approved, the claim settlement, 99% of it happens automatically within 48 hours.
Right.
So that takes away a lot of the claim manual processing overload completely out of us.
Interesting.
Which means, I mean, the team is focused really on corner cases, edge cases, which require human intervention. And we manage that, I mean, with a very low 2-digit number team with the kind of volumes that we're doing. So I think I get there. Yeah. Interesting,
Karthik. And possibly that's also a lot of pointers for our next conversation, right? And hopefully we'll have that much sooner. But I can only imagine how complicated this entire thing is, right? And like I said, I have had a first-hand experience, right? And trust you me, that nothing to do with you, right? Or what you're doing, right? The way it's possibly being sold, I think, is just bizarre, right? And being an typical Indian consumer, right? You think if you have insurance, you're already covered, right? The expectation levels are very different, right? But Karthik, I'm going to move into the other side of our discussion, right? So tech ecosystem is kind of growing, right? When you talk about embedded insurance, you're largely looking to sort of piggyback the tech delivery layer or the tech engagement, right, which exists and basically blended there, right? Offline, of course, there's a lot of experimentation which is happening. There are some other players who are kind of doing it, but my sense is, I think 2020 onwards, we've largely become an economy which has become internet first, right? There's a certain sense of homogeneity which is coming in, and it's like the markets are becoming exciting, but also very, very complicated at the same time, right? Now, unfortunately for us, India is not one consistent market, right? India has many markets, and for somebody who's the business leader in the organization, and that's the most difficult and the most complicated part of the puzzle, right? When you talk of insurance, we also, as a country, have had those baggages, right? Of not for and reasons for not buying insurance, right? So we are not a country which was ever tuned to buy insurance, irrespective of the education that we had, right? We never understood what it was meant for, right? What you're talking about are a lot of tier A phenomena, right? Right, and we experience it, right? Because we've gotten to a certain level. There are earning levels, right? Your ability to take certain risks or say spend on certain things is much higher, right? When you start looking at a layer below, which is the tier 2 and the tier 3 Indias, not a lot of this exists, right? Opportunities are much limited. These are largely self-serving cities, right? I mean, we're not talking about institutionalization. We're not talking about structured jobs. There's a lot of that complexity, right? The price sensitivity continues to be very, very high in those regions, right? What's your sense of it, right? Because what you're solving for is, and what you're looking at with these relationships is a pan-India play of sorts, right? What's been your experience when you're tracking for and possibly designing products that are going to be suited and suitable for the entire country and the region? What has been your experience in solving for tier 2 and tier 3, right? Are there some unique challenges that you come across? Do the costs, for example, become different than you possibly anticipated? Because, cost of education possibly is going to be higher. Expectation, like I said, is going to be very different, right? Could that mean there's a little bit of a dent that you'll have to take? What's happening, right? Because, you are in a difficult spot, right? You pretty much have all the expectations of the world on your shoulders, right? And thus this question becomes important. Would love to understand, right? How are you solving for that tier 2, tier 3, and the regional aspects and the baggages that we live in?
Great. It's a great question. I mean, a part of why somebody would get onto a mission and solve for is when you think, hey, what's the kind of impact a company can have, right? And impact really comes with scale and how many people you can hit with whatever you're bringing to the table. Let me break this into two parts. The first part is, the XEZA, the urban millennials and all of that. And there we see a high degree of inclination to now buy insurance policies because there is awareness. There's also a category which is already insured. Right? They have probably kuch nahi to there is at least a life or a health insurance that they already have.
Right.
Right. So they understand the benefits and the non-benefits as well when they buy a product like this. Tier 2 is where the game plan or the execution completely changes. A very high degree of the tier 2, tier 3 markets that we are right now operating in, we're seeing that this probably, they're not even insured. They don't even have a basic health or life insurance, right? Discretionary spend to be able to afford paying for a risk cover is generally not there.
Sure.
But that's also the biggest opportunity because this is embedded, and sachet or bite-size insurance is probably the first way where they'll start to experience a benefit of a product like insurance. To give you an example, we work with a large pharmacy chain, and even in a city like Bombay, you see like two different, customers altogether. You have a pharmacy in a posh locality,
right.
And then you also have a pharmacy which is right in the middle of the slum. And then when you say, hey, you know what, here is a 15 rupee insurance product, and agar aapko dengue or malaria or anything of that happens, vector-borne disease happens, you're covered.
Right.
That pitch resonates with that tier 2, tier 3 guy.
Interesting.
Right? 15 rupee, yes. Dengue, malaria, oh yes. Last week, it happened to my neighbor.
Right.
I see that risk. That risk is relevant to me. You tell me, pay me 7,000 for a life insurance product. Sorry, I can't. But this is now a very relevant risk to me. With now, you come to me with a very relevant product, right? Think of the daily wage earner, right? Poor guy makes money on his daily wages. If he gets unwell and he goes to hospital, he loses his daily wage.
Right.
In addition to the cost.
Right.
You tell him to buy health insurance, he probably won't be able to work out of his math. But you tell him, here is a 100 rupee product. For every day that you miss your, dehadi, we'll pay you 1,000 rupees.
Right.
That is what is relevant and he can process. And our job as a company is to really create these products and then take it to the right masses, which helps them understand.
Karthik, while all of this sounds exciting, right? And I'm not disputing that. I mean, we see this on pretty much a daily basis, right? Across our work, across people we work with, right? And these are problems that are very, very pertinent, right? Unfortunately, when you talk of, say, this larger India, right, which is, now adopting insurance in some way or the other, the bigger problem is, the problem is not in the ability to pay. That 10, 15, 20 rupees, 30 rupees, say 100 rupees also, right? I mean, they get the logic, right? That, something happens to us, we're going to get covered and all that, right? The bigger problem is one, the issue of trust, right? And second is, when I contract this problem, right, whom am I going to go to, right? Now, this is not a company which has a physical center or whatever, right? Do I have the number? Who do I talk to? How do I explain? How do I, for example, where do I retain my, say policy number, right? As just a basic minimal piece, right? That becomes a huge challenge, right? And that becomes a big deterrent in these guys saying that, I mean, this doesn't happen, right? This doesn't work, right? And that's becoming a mindset issue, right?
Sure.
What do you do in an environment like that, right? And that's a big problem, right? Not being physical in insurance like play becomes a huge problem. I mean, telecom companies even today continue to still operate physical centers, right? Of course, they now have distribution centers that are very different, right? But it's just so much more important for them to be visible that, something people are not very comfortable with idea, right? They want to walk into a store and want a solution there, right? And I'm sure you have the numbers around it, right? Because that's a very close parallel to what you do, right? What do you do in an environment like that?
Yeah, you're 100% right. And which is why insurance has traditionally been always being sold by the agent who is somebody in the locality, and that's where the trust
or a bank.
Yeah, fair. Because the trust aspect of who to buy from is always there.
Right.
Unfortunately, in a model like embedded, where you're trying to sell such buy-size product, that is not a financially viable model. Correct. Right. And which is why what companies like us do is we offer multiple channels for the customer to reach out in case there is an issue. So while we have your digital first channels, which we always prefer, there's an app, there's a website, you go and file a claim, everything's automated. Right. Not everybody is comfortable with that, and which is where we are also available on a call center and also available on WhatsApp, so that we are able to cater to this market.
Right.
For us also, it's very early. Initially, we've still not touched or rather exhausted the tier A market, and TLP is anyway something we'll come up to later, but we are seeing signs of what you're just saying in the customer behavior. And I think it's a journey that we'll also learn and adapt to as we go deeper in that market.
The first thing that I did when my lens started, the frame went bad, I went to the store and I spoke with that guy. He's like, sir, I'll salvage, right? I'll save the situation. And so that reassurance becomes very important, right? I think, and I'm sure in a market like India where, education levels are still much lesser than how we would want it, right? And the cultural baggages and, just the comfort of, I think, touch and feel, I think is so much more important. And I think an environment like insurance is just becomes, because there's hope, right? That you're giving. And I think hope, we tend to believe hope a little more and get hopeful about it when there's a touch and feel around it, right? Karthik, moving on to our 2020 question, right? Now, I think no conversation today can be complete without talking of what we experienced in 2020, right? And how COVID happened, right? We're clearly, coming out of that phase, right? Things are getting back to normal. There was a phase when everybody thought that, we're becoming a digital society, very large digital society, possibly the largest ship out there, last billion people market, as some people classically sort of put it, right? But as we've continued to exist with our crevices, right? And those crevices have also become a hedge for us, right? From, say, monopolistic behaviors that were possibly there, right? We continue to enjoy our touch and feel, right? We continue to appreciate it, irrespective of how digitally savvy we are. There are certain tendencies that are setting in, but then there are certain tendencies that we will possibly go back to the normal, right? A pre-COVID phase, right? Now, what you're possibly building, right? And this is also a future question for you, right? Is possibly digitally first, right? And brands that have digital engagement, that have a digital footprint, right? There is a consumer interaction which is happening in a digital way, because it's just so much more efficient, right? What happens to the business as we go back to normal, right? Our purchase behaviors then tend to go back to the real estate driven model, right? What are the plans there? I'd love to understand that.
Sure. So I think the way I look at it is, rather than going back, it is like you now have multiple avenues available for the end customers to enjoy or consume those services, right? So, for example, let's say if I was previously watching movies in the theaters only, now I'm watching in the theaters and online. So there is a new channel opened up, and my split was 90-10. It probably has become 50-50.
Right.
Like that is how I see it, versus more than going back, it is about multi-channel approach that the end consumer will start to enjoy. Even office, right? It's now become 2 days in office, 2 days of work from home, and then 1 day working from, let's say, Goa. So it's like multi-channel behavior that end consumers are starting to do.
Right.
Simple. Any company, not just Symbo, but any company now has to think of how do I be present on those multiple channels. Right. And which is where, when we think of this problem, it's about, hey, I have my consumers online, I have my consumers walking into the store. So I should have the integrations and technical capabilities to be able to be present there. Mm-hmm. What are we doing about it? We are building pipes to be able to support all of this. So we're having ready-made integrations with a lot of POS systems, ready-made integrations with a lot of e-commerce systems, so that if a brand who's saying, hey, I'm now omni-channel, I have physical stores, I have online stores, we are saying, hey, so are we. We just have to, it's just a for you to turn us on and off.
Very interesting. Karthik, we're towards the end of our conversation, right? What are the next 2 years like? Right, I would have loved to ask you a fiber question, and my saying this is becoming a cliche, right? Because I think we're a very different market. I think what we possibly in next 2 years, I think even that is very difficult to sort of fathom and comprehend, right? And I'm sure in your position, in your seat, it's all the more challenging, right? I think prioritization is just become so much more complicated, right? Which is the piece that you go after, right? And there's also competition, and what you're sitting on and you're sort of solving for is actually one of the hottest spaces in fintech, possibly last frontier, right? Like somebody said in my one of my earlier conversations, right? What are the next 2 years like? We'd love to understand that.
Yeah, so I think we are right now superbly poised to be able to kind of make the most out of the systemic changes which have happened, right? The digital adoption has increased, and awareness about insurance and what it can do has increased. Insurers, which have been typically used to operating in a certain way, have also become very innovative. So there is a lot of tailwinds in the ecosystem which is happening, and thankfully we sit on top and work with all of them to enjoy the benefits of these tailwinds. What does that mean for us as a company? Obviously, to then move fast, act fast, bring the right products to the market, experiment and fail fast. we already are seeing some of our categories and products do really well, so double down and grow on that.
Right.
So 2 years from now, I think if we are able to get to a point where we are doing 10x more policies on a monthly basis, and beginning to at least start bringing relevant products for the tier 2 of the market, which you spoke about, and
Right.
really bring products to them which change their lives, right?
Right.
That is where we'll get personal satisfaction. That hey, a
Interesting.
daily wage worker fell sick, and for the first time, he was not worried about how will I feed my family. If we are able to do that,
Right.
I think, yeah, I mean,
I think there are a lot of other people beyond Symbo who are equally serious about solving for the daily wager, right? And for a variety of very obvious reasons. Karthik, you haven't really given me the sectors that you're really focusing on, right? I'd love to hear from you on that one as well. Next 2 years, I mean, you built a great partnership with Lenskart. I've been a consumer. It was a great experience, right? Irrespective of whatever said and done, I think it wasn't an experience which was unlike a traditional large insurance company which takes forever. I think this was much faster, irrespective of what the outcome was, right? It was very quick, right? There was a lot of logic and reasoning, right? You've solved for one big problem, right? With one brand. Would love to understand what are some of the key markets and areas and sectors that you're going after, or say some of the brands. Of course, that will be an unfair question, but I'll leave it to your judgment and call
no, no,
to tell
sure.
us.
So in terms of the partners, right, from the one that you've experienced, we right now about 15 partners, all
Interesting.
equal, big and large. I mean, we can name some of them. There's Red Tape on the shoe side, Decathlon, where we're doing a lot of the sporting goods. And you'll see a few more announcements come through where we're really creating innovative products. The way we approach this is very like a SaaS first plug and play kind of a model. So e-commerce is one big vertical, but within that, eyewear, footwear, sporting goods, bicycles, these are some categories where we've seen some great traction. So we're doubling down on that. That's e-commerce and retail is one vertical. Second is fintech. There's a lot of lending, a lot of transactions, all of that activity picking up, and there is scope for relevant products within fintech as well. So that's going to be like the next vertical for us. Marine logistics, again, growing, booming, high degree of insurance requirements within those categories. Again, a very strong vertical where we are doubling down and increasing our partnership outreach. And then finally, I think we are also trying a few what we call greenfield categories where, I mean, EdTech is a great example, right? I think it's a booming market. There is a lot of interesting products that we can kind of come up with, and we are beginning to pilot that with a couple of our partners. So
Interesting. Karthik, while of course we've discussed all the challenges in your life, right, whilst you're solving for the Indian customer, and that's quite cumbersome, right? But I think what is very unique to what you're doing, right, and I think insurance in general, especially when it's done around products, right? It's embedded, right? But it's not necessarily very cumbersome for you to sort of as a consumer go out and buy. What it does is it brings on a reassurance, right? I think what you should possibly also start to look at is how you are improving these businesses on the conversion levels, right? Because you're possibly taking away the tentativeness in a consumer that if something goes wrong, right, something wrong with this brand, there's somebody addressed you, right? And I think that's a brilliant and a big value add that you're bringing to the table, right? And many others, right, who are operating in the same space. I think their business performances are going to increase, right? And I think that's a point that you should possibly use in your negotiations going forward. Karthik, my last question: you've been in the startup ecosystem for a fairly long time. It's been a great journey, right? There are many people who've continued to work with larger institutions, have been on the fence when it comes to say working with a startup, right? Because it's a high growth play, right? It's not necessarily very comfortable, but it could be massively and superbly compensating, right? And satisfying because you're part of a change, right? But you have these people on the fence, right, who choose comfort and predictability over speed and a little bit of a discomfort, right? What is that one advice that you would, one suggestion, right, that you would want to give out to many of these people who would be listening to this, right? What should they consider, and why should they consider working with a startup? I'd love to end at that note, right? What would that advice be?
Yeah, so I do advise a lot of people in terms of what they should be doing, but for me, it's very simple. As of today, in the era
Right.
that we are in, uh, moving to the startup is, people think of it as risky, but
Right.
it's like complete antithesis. It's anything but risky, right?
Right.
Because of the ecosystem and the way it's evolving today. So there is absolutely zero risk in moving to a startup today. If there is an opposite word to risk, I don't know what. It's probably rewarding to move to a
Right.
startup. Why? Because in terms of compensation, most of the startups are able to match, right?
Sure.
So what are the risks? Hey, my
Maybe
salary
more.
might take a hit. Correct. My salary might take a hit. Hey, the company might shut down. Hey, I will have to work hard and I might not be able to be ready to be able to perform at that level. Probably these are the only
Right.
risks. Compensation, not a problem anymore. Startup shutting down, very much possible. But if you are someone who's being with a startup, there are 10 other startups waiting to bring you in, right? So
Right.
that's not a risk. Third is, will I be able to perform at the level? You will, right? Once you get into it and you start enjoying it, you will. And if you're not able to, you will find a way where you can bring the best of what you are good at. And startups
Right.
allow you to explore that. I moved from marketing to sales, I've done product management, and now I'm in a kind of a generalist kind of a role. And that was only possible because the startups I worked with gave me the free hand to try out and figure out what I'm good at.
Interesting.
Uh, so if you go with that mindset and apply yourselves to be able to say, hey, I will try and do the best of what I enjoy doing, there
Right.
is no way that you'll come out on the other side with any kind of a negative.
Super, super. Karthik, I think on that note, I'm going to bring this conversation to a close, right? But I think, you know, I think with somebody like you, right, who's had such diverse experience, right? And I think the sector that you're solving for, no conversation can be ever complete, right? You can do many, many more such conversations. And I look forward to doing some more of them. I think what's particularly unique, I think, in your journey, is that you've consistently identify great opportunities, right? India is a great transitioning market, right? So if you continue to observe it, right, you will identify those opportunities, and there's nothing better and more exciting to be in a place where you can see that change happen, right? And you can be part of that change. um, and it kind of matches the risk reward ratio as well, in a beautiful way. Karthik, thank you so much for doing this. It was a pleasure to have you with us for this candid conversation, right? And discussing facets of insurance, right? And how is it becoming important? Why is it becoming important? And the changing behavior of the consumers. There are things that are still not sorted, right? There are perception issues, cultural baggages. We're still an economy which does not necessarily has the kind of disposable capital that we would want. But I think we're getting sensitive, right? I think with 2020 coming in, we're consuming more and more content. Arbitrage is going down. Our aspirations are kind of increasing. And as our say monetary position improves as a country, I think we are headed in a very different direction, right? A consumption boom is what we'll possibly experience, like the one the world is not seen, right? And I think the role for you in a process like that improves because you're bringing in that reassurance that, listen, irrespective of whatever happens to your product, all the experience, right? We are there to cover you in health, in experience, which is a phenomenal, reassurance, right? And like I said, hope to give. It brings in a very different kind of a confidence in an economy, right? And especially an economy which has had trust deficit right at the fabric of it, right? It's an important role, and it's a critical role for you to play. With that, Karthik, thank you so much. It was a pleasure to have you with us. Look to have you
Thanks,
much
sir.
sooner with us.
Thank you.